the silver price has been managed by China. China is it's the largest importer of the sources of silver, which are non-ferrous ores, particularly copper, zinc, to a lesser extent lead, and also gold. That's where it all comes from. Over 70% of silver comes from that. And as a result, basically China has been accumulating huge amounts of silver for a very, very long time. People suddenly realized that it wasn't prices rising, but the currency going down. Now, the moment they realized that, they dumped the currency for anything, just to get rid of it. They bought anything.
Quick favor before we begin: if you enjoy this video, don't forget to like and share it. Every like and share helps YouTube recommend this video to more people, which really helps the channel grow.
The silver price has long been managed by China, the largest importer of non-ferrous ores like copper, zinc, and lead, from which over 70% of silver originates. Alasdair Macleod, a prominent precious metals expert, posits that China has been quietly executing a deliberate policy since 1983 to accumulate massive reserves of physical gold and silver to safeguard its economy against the ultimate collapse of Western fiat currencies. This stealthy accumulation of physical bullion serves as a strategic hedge against systemic monetary risks. The country recently reversed its policy of exporting silver to satisfy Western supply deficits, causing physical prices to rapidly jump from $50 all the way up to $120. Consequently, global fiat currencies are heading toward zero, as China foresees an imminent global market crash where currency values fall rather than commodity prices rising. Now, we present the clips from Alasdair Macleod's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
The silver price has been managed by China. China is it's the largest importer of the sources of silver, which are non-ferrous ores, particularly copper, zinc, to a lesser extent lead, and also gold. That's where it all comes from. Over 70% of silver comes from that. And as a result, basically China has been accumulating huge amounts of silver for a very, very long time. It's part of official policy, not publicly declared. They don't go out and tell us this month we bought this month we refined so much, and that produced so many tons of silver. No, of course they don't. They don't tell us what's going on. Believe you me, the policy going back to 1983 has been to accumulate gold and silver. And the PBOC has total responsibility for the acquisition of gold and silver. Now, what's happened is that in the last however many years, when you've got this deficit, which quite correctly comes out of the Silver Institute's tables, that has been made up by China exporting silver to satisfy demand. Why? She's been keeping the price of silver under $50. So, and then this changed. This changed sometime, I would guess, in sort of late September, early October, probably late September, along with rare earths. The rare earth story had been brewing up for a little while, but quite clearly China was not going to export silver for America, which had then decided it was a critical mineral to supply America. So what did she do? She reversed her policy. And we saw silver jump from $50 in I think it was early October, all the way up to 120. And if you look at what China has done in the first quarter of this year, she has bought a total, I think the figure is 1,626 tons. Now, we haven't been given any export figures because usually there's imports and exports. But for some reason, there hasn't been any export figures, if you like, issued. Now, this 1,626 tons annualized, we're looking at about 5,000 plus tons. Now, this, if you like, compares with the roughly 3,000 to 5,000 tons which China has been exporting every year recently to satisfy and to deal with that supply deficit in the West. So in other words, this is a completely volte-face. And it's fascinating that she has acquired all this silver at a time when we've been trying to get the hell out of it. This is part of a wider policy, actually, because at the same time, China has imported 163 tons of non-monetary gold. That was up to May. We haven't had June's figures yet. And on top of that, there's a further 40 tons recorded of non-monetary gold. So that's an addition to the 163. So around about 200 tons gold. And that's what's been reported. I mean, it could be, the truth very often in these things is somewhat different. So what's she doing? What's she doing with stockpiling copper? What's she doing, sort of ceasing exports of things like fertilizers and sulfuric acid and so on? I mean, the answer to this, quite simply, is she doesn't want any dollars. Her trade surplus is now hitting records. So she's earning foreign currencies, which she knows are going to go to zero. She doesn't want them. So if you like, you could put it that China foresees a situation that's not prices rising, but the currencies falling. And she's indulging, if you like, in a central bank's version of a crack-up boom, which for people who don't understand what it is, I mean, this was something that the economist Ludwig von Mises wrote about because he experienced the demise of the Austrian shilling and also observed the demise of it was the Austrian crown in those days. He also evidenced the hyperinflation in Germany, which lagged the Austrian one just slightly. And he observed that in around about the last 5 or 6 months of this, this collapse of the currency, people suddenly realized that it wasn't prices rising, but the currency going down. Now, the moment they realized that, they dumped the currency for anything, just to get rid of it. They bought anything, even if they didn't need it. They just wanted to get rid of wheelbarrow loads of this rubbish. And that's precisely what China is doing.
China has radically altered its precious metals strategy because it refuses to accumulate rapidly depreciating foreign fiat currencies despite hitting record trade surpluses in Western markets. Publicly available market statistics show that the state has aggressively ramped up its domestic gold mining production to become the world's leading producer by a wide margin, while steadily migrating immense quantities of physical precious metals out of volatile Western capital markets directly into its own highly secure domestic vaults. Furthermore, standard household savings in China run at roughly 30% of their total GDP, which equates to an estimated $5 to $6 trillion looking for a safe financial investment home every single year. Because the local real estate property market is no longer fashionable for average citizens and domestic interest rates continue to decline, this massive wall of ordinary capital is predicted to heavily unlock overwhelming investment demand for physical gold accumulation accounts instead of speculative paper trading on Western exchanges. Now, let's get back to the interview.
China realized that fiat currencies never, ever survive. She was emerging from the Mao era into a world of fiat currencies. They weren't going to survive. So what she had to do was to play the fiat currency game, but never forget she needed to protect herself against their collapse. And this has been her policy the whole way through. She, between 1983, when the People's Bank was appointed with responsibility for the entire nation's gold and silver reserves. I mean, I'm not talking about bank reserves, but ownership of gold wherever. In 1983, she started accumulating gold in that big bear market. I reckoned, and I did some calculations, it was very much a back of the envelope type calculations, but I reckoned that at contemporary prices, she probably accumulated around about 20,000 tons by 2002. The reason 2002 matters is that the Shanghai Gold Exchange opened, and for the first time, citizens in China were allowed to own gold. And indeed, I think 4 or 5 years later, the Chinese government even advertised. They did television adverts. Buy gold, it's good for you, whatever the strapline was. So you can see that there's been a deliberate policy here. They've also, as you alluded earlier, they accelerated mine production very, very significantly to the point where they rapidly overtook South Africa, which admittedly was declining in its output, and has been the world's largest gold output, miner, if you like, by output, I can't remember when the crossover was, something like 2007, 2008. So that's been, almost 20 years she's been the largest mining nation. And then we have seen this continual migration of physical gold from Western capital markets into China, never to return. So my guess is that she's probably, as the state accumulated a further 20, maybe 25,000 tons. Of course, you've also got the deliveries out of the Shanghai Gold Exchange, most of which has gone into jewelry, admittedly, into the hands of the public. That is a further 28,000 tons. We don't have scrappage figures, but anything that's scrapped has gone back into the SGE, vaulting system, and would have, it hasn't left the country, so it's still there, sort of thing. So that 28,000 tons, some of it may be owned slightly differently. And of course, the other thing is that the banks, on behalf of their customers, bear in mind, banks actually don't like to own physical things. They like paper, but on behalf of their customers, acting as custodians, they will have also acquired significant amounts of gold, which will be within the SGE vaulting system and therefore not recorded as delivered anywhere. I reckon there's probably another 5,000 tons there. And bear in mind also that they offer gold accumulation accounts. And these gold accumulation accounts run alongside deposit accounts. And the People's Bank of China's policy has been to reduce interest rates, in the wake of the property smash and all that sort of stuff. And so while the banks have been very imaginative with, trying to sort of offer deposit products, with sort of slightly higher rates, if you hold on to your deposit for 3 years, that sort of thing. The fact of the matter is that once gold starts running again, you can see that this is going to unlock huge investment demand from ordinary savers. And bear in mind that in China, the savings ratio is about 30%. Now, I'm looking at household savings, not overall savings. Household savings running at about 30% of GDP. That's the equivalent of between $5 and $6 trillion every year trying to find an investment home in a world of declining interest rates in China anyway. Property used to be very fashionable, but no more. Stock market, yeah, maybe some interest there. But you can see where this $5 or $6 trillion is mostly going to go to. And this is one reason it's interesting that in the recent changes, the domestic market has been told to stop speculating. But guess what? ICBC, I think it was reported to be reducing its expense ratio, its expenses, if you like, on the gold accumulation accounts. In other words, encouraging real investment, but discouraging speculation, which is a fascinating topic.
The massive accumulation of raw industrial commodities and precious metals clearly indicates that the global financial landscape is entering the final phases of what classical Austrian economists call a central bank crack-up boom. Historical evidence from past global hyperinflations explicitly demonstrates that once ordinary citizens finally realize their paper money is losing all intrinsic value, they will rapidly dump fiat currency for any tangible asset available to preserve their purchasing power. The dramatic drop in silver exports alongside massive stockpiles of copper, fertilizers, and non-monetary gold confirms that a massive monetary realignment is actively taking place behind the scenes. Observers foresee that this historic migration of physical metal to the east will permanently alter the purchasing power of Western currencies, crash the global financial system, and completely redefine global wealth distribution. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.